Before we get started, though, on AI and perhaps the regulation and destructiveness or the benefits, the world's doing a pretty good job of blowing itself up without blaming AI right now. So perhaps there's hope that generative AI can make a better world in the future. I'd really like to get started on the policy side first and actually ask Alessandra, how do you actually differentiate between ChatGPT-4 and really large language models, since everyone sort of throws them in one bucket, and think about the future in regulating? You have been a banker yourself. We'd love to get your perspective on that.
Well, thank you so much for having me here today. My perspective is from not only the Italian, industry, but also from a European perspective, as I sit on the board of the SSM, which is the European Regulators for Systemic Banks of the ECB. We have been, someone was just telling me that last year this festival was all about regulating DLT and blockchain. This year we're here to talk about AI and chat, and boxes in general, as to whether they should be regulated, how they should be regulated, and we heard from Mr. Mills before a number of the issues that as regulators we're facing. Well, first of all, let me tell you that, we have been following very much a debate within the EU. We've seen in 2021, the first regulation being put forward, and there are a number of working groups, that stem out of that piece of regulation. We're trying to understand as regulators how we can really develop new rules to go towards innovation without stifling innovation, at the same time providing that protection our consumers who have seen that the risks that AI can bring to the market are wide, they're different. There is a sort of like a 4 level of risks that the EU is indicating, from like very high risks to moderate risks, where we will be more lenient in the introduction of regulations. But the very big point here is how you balance these two needs, how you balance the need to protect consumers and protect the stability of the market with the urge and to implement innovation, to make sure that innovation is in the market. So that is really at the cornerstone of our activity now. How do we go about this? We specifically in the Bank of Italy, we've been trying to have a different form of dialogue with the industry, whereby we have created not only participate to the sandbox, which is run by our Treasury Minister, but we have implemented an innovation hub ourselves in Milan, which is our innovation center, where we work together with the industry through cohorts to call for proposals. And we started with a proposal on AI.
So I will say I caught a little bit of a dig against venture capitalists that were driving you crazy with last year was DLT and blockchain and this year is AI. I want to get back to one thing, though, is just to poke a little bit more as we set the stage before we get to the investor side, which is the difference between a ChatGPT-4 that's consumer-facing, but large language models that are really focused on productivity and efficiency of companies, and differentiating between those two, and how regulators think about that issue.
I think that that is a very important differentiation that we need to look at, and there is. I think that we need to move according to the use cases that we see. That is the best way forward for us. As Mr. Mills was saying before, it's the A point for the regulators. The actual application of technology is a very moving point. We do not know exactly how those use cases are going to work for consumers and for the industry. So I think we need to move with that with a lot of sort of trials, and that is why the role with the industry and the regulators has to be one of cooperation, that needs a lot of cooperation, not only between industry and regulators, but also among the regulators at global level. Clearly, these issues are not only for a specific geographical area, but they do need to be shared across jurisdictions.
Thank you. Very helpful. Ty, when you think about SEB and you think about your mandate on the investment side, what are the most interesting areas from implementation of either large language models or ChatGPT that you're seeing in the bank and from an investment perspective?
Can you hear me well? No.
Well, we can move to, okay.
Yeah, I just wanted to comment that I was here last year to talk about blockchain. There you go. But at SCB 10X, we are the digital technology investment arm of Siam Commercial Bank, and we invest in the area that could have disruptive impact to the banking and financial services industry. So we invest across from fintech, blockchain, crypto, and AI. Yeah, so I think maybe in general, just wanted to say that there are many interesting areas right now that we are looking into generative AI. And we actually very interested in infrastructure area. And we also try to see whether generative AI infrastructure could also combine with blockchain. And there is this infrastructure piece that we think quite important because for generative AI, of course, we're talking about large language model, and we see so many companies like OpenAI, of course, like Google, Meta, they all try to come out with the large language model. And for all these training, you need a lot of computing power. And all this computing power are quite expensive, even though, AWS will tell you that their cloud computing can be not so expensive, things like that. But we actually see that right now there's a lot of players in the industry that try to drive down the cost of cloud computing, because it's very important for the generative AI to be able to progress forward. And not everybody will have a lot of capital to actually spend to train the AI model. Therefore, you need to try to optimize the cloud computing costs. We actually invest in this startup called, this one called Together AI, which is a decentralized cloud focusing on AI. And they also do platform for large language model that are focused on open source. So this Together AI, what they do in order to drive down the cloud computing costs is that they optimize the network, the distributed network system, so that the cost of cloud computing can go lower, and they could go to source the power from different places, from different cloud computing sources that are at lower cost, can be using the natural energy and things like that, or solar power to generate all this computing power. So something like that is what we are focusing on, because we think that it's very important to first build the infrastructure to be quite solid for this generative AI to be able to progress much faster.
And Sheila, you're really at the front end of the funnel, and venture being on the early stage side. What are you seeing and as sort of the most interesting areas, at least, that are emerging as well? I mean, obviously, ChatGPT is a little expensive now.
Yeah. I think there's like the models themselves, and there's a bunch of companies that have raised an insane amount of money to build general models. And then there are a bunch of applications. And in the application set, for fintech, we've seen a few different spaces. Fraud, or preventing fraud. We've also seen fraud. Accounting. So a lot of people believe that the accounting profession is one that has a lot of low-level tasks that already can be replaced with AI. And then we've seen a lot in the legal tech space too, that sometimes intersects with fintech, but usually not. And those three categories are probably the most of what we've seen that's interesting. We've also seen a lot of companies building products for like financial analysts. So like stuff that sits on top of Bloomberg, although Bloomberg has their own Bloomberg GPT. And I think there are interesting applications in each of those sectors, and probably many more that we haven't seen yet. I do think the use of AI in our portfolio goes well beyond those sectors, though. And what I'd say is almost all the companies in our portfolio are finding that they're more efficient than they were before. And
to that point, are you seeing companies say, okay, what we developed is not as good as the open source large language models, we're going to rip out what we've done and we're going to put it into our product? Have you seen much of that? We have in our portfolio.
We haven't seen much of that yet, with the exception of one company in our portfolio that actually it is a customer service plus use case, and they actually laid off more than 50 people, and have been using more and more ChatGPT, or not ChatGPT, but GPT-4. And that's been great. But other than that, in early stage companies, we've seen seed companies that previously would have raised $3 or $4 million saying, actually, we'd like to only raise $1.5 million. We're way more efficient than we were before.
Yeah. Back to how cloud changed efficiency.
Exactly.
From the early days of the internet to now, we're seeing much more efficiency in startups. Exactly. So I think there was a comment made earlier how the EU really leads in regulation and the world follows. I think we saw that with GDPR, that it was not a Europe issue. It really became much more of a global issue back in 2017 and 18. So Shraddha, how do you guide your companies being here, looking at the regulation coming out of the draft regulation, at least coming out of the EU and other countries? How do you guide companies now around large language models and GPT-4 as part of policy management?
Interesting question there, and I think as a policy professional, the one task that you always have is to be that bridge between industry, in our case, our portfolio companies, and policymakers and regulators on the other hand. And you're always trying to balance the two sides, help industry understand some of the challenges, and vice versa. I think we're at a stage in policy making where I would say as a policy professional, all my empathies are with regulators and policymakers right now when it comes to AI policy making. Because what we're seeing is absolutely something which is unprecedented right now. And I think what's very important to understand is that at a time when industry itself, we as investors, startups, founders are grappling with the impact of AI and what it'll potentially mean, the pace at which it is evolving, it is becoming absolutely impossible to keep pace with that technology. And then here you have, on the other hand, this pressing need for regulators and policymakers to put in place regulations rather quickly, which I think is also a concern because, when you haven't even understood the full scale and impact of a technology that's evolving so quickly. I mean, look at it, we're talking about ChatGPT today, but last year, how many of us were even having this conversation? So
but what's interesting about that comment is it actually isn't new.
Exactly.
It's been around a while, and what happened was it bubbles up, and then all of a sudden it becomes, the thing to talk about, right? So how do you prepare the companies early enough that they don't get there?
Very good question, because to your point, our first AI investment was a decade ago, right? But something's changed, and it's very important to understand why are we at an inflection point right now? Why is this conversation, why is this panel taking place here at CMPD this year? So I think that understanding is very, very critical, because at the end of the day, we need to ensure that we as industry are supporting regulators and policymakers in that evolution and understanding that when they put in place, so when you talk about EU leading the way with GDPR, India wanting to have the India way on AI regulations, I think it's very important that we're thoughtful and mindful when we're going ahead in regulation. I think the few things that we're picking up, at least in conversations that I've been very closely associated with how India scripted its data privacy law over the last few years. But I think the one conversation that we're seeing right now across industry and policymakers is, let's be thoughtful, let's be mindful, let's not rush into this. But what's also interesting is, unlike Web3 and blockchain, I think here is an industry that is in some ways crying for regulation as well as enablement. And at least I can speak about what's going on in India. On one hand, you have startups that are saying, you know what, there's an opportunity out there, but we need the government to enable us with the infrastructures. You heard about GPU clusters, and that's an active conversation going on with policymakers. How do you enable startups to ensure that innovation is not getting stifled, to your point, because of lack of infrastructure? So what does it mean to get the GPU clusters in? So that's one part of government and regulators as enablers. But I think it's the other part which is more interesting and which is the conversation going on around the world, which is around the whole risks of AI. And to Naveen's point, he hates the term responsible AI, but I think, are we at a point where we need more self-regulation versus heavy-handed regulation? Do we need light touch regulation? What is light touch? I think the other conversation which is very important to have is that, are we rushing into AI regulations too soon at a point when many existing regulations can possibly cover for the risks that AI is posing? For instance, data privacy, for instance, consumer protection, for instance, what competition regulators bring in place. Do we have frameworks already in place that can somewhat take care of some of those concerns? Or is there a need to have a full-fledged AI regulation across different, and then what would that look like? How would there be interoperability between different countries? So we can talk about it, but I just wanted to leave you with those open thoughts.
So I want to go back to two issues you brought up, and then I'm going to come back to Alessandra on the regulation side, because I think it circles around, which is, if you look at fintech, which we were the first fintech fund in Asia, right? We've been doing this a very long time. Entrepreneurs are not great at self-regulation, right? I mean, let's face it, FinTech 1 was all about, we don't need banks, we don't need regulations. And then people got a little bit smarter. But even today, you have to make sure that FinTech startups understand they have to act as grown-ups immediately, right? The regulators are there, you have to respect regulation.
Yeah.
In your role, let's face it, entrepreneurs like to push the boundaries. What are the ongoing conversations with the startups about, you can't sit around necessarily and wait for regulation, but how do you start to develop a company in a responsible way so that when regulation comes in, that they adapt and that they're actually doing what's right before the regulation has a chance to get in place? I mean, we knew how payments grew up in China, right? Without regulation, government came back and regulated it. Everybody had to go get licenses. We're more further developed now, right? Yeah. So how do you help these companies in your role think about that now before the regulation catches up? Because it's never going to be a perfect scenario.
I love that question, because this is a conversation we have across different stages of our founders. And increasingly what we're noticing is that, in fact, Peak 15, earlier Sequoia Capital, we were one of the few firms that introduced a public policy function pretty early on and help guide our portfolio companies through regulatory issues and policy risks. And we feel regulation is a very big risk. But earlier my conversations used to be largely with companies that are in growth stage, at best venture. Now those conversations are happening at early stage. Yeah. And the reason is exactly to your point. I think at every industry, and AI is, I think, particularly a technology that spans across several. So, there's AI in fintech, for instance. So it's going to impact every single industry. But I think that the conversation that we're having with founders today and with startups today is that it's true. You will always get into a sector where you will see there is some regulatory arbitrage, or there is some, I would say, room for you to experiment and move around regulations, or you'd rather be in a sector where the government and regulators have nothing to do with it. You just want to stay out of their hair, right? And that's an ideal scenario. But mostly, you will become too big to not be noticed, and regulations will play catch up.
Or at least you hope to become too big not to be.
You hope to become, and the whole idea is as investors, we'd like you to become big enough that you impact incumbents in some way, and then regulations will play catch up. The interesting bit that I want to point to what's happening on AI particularly is, it's actually founders and startups who are saying we want regulations. And the reason is that they believe that the fear psychosis around the risks of AI is so huge that unless you are regulated and there are regulations in place, you will not see the adoption of AI. So to enable adoption of AI, you need a regulatory framework that's light touch, progressive, but enables innovation. And that's the conversation which I find very different to most other technologies that at the beginning say, you know what, how can we avoid regulations? Like, how can we get to a place where there is absolutely nothing to govern our industry? And then eventually you get to either self-regulation or somewhere in between. But AI in that sense is very, very different, and especially, I would say, very different from the conversations we were having around Web3 and blockchain and all of that last year.
Yeah. So Alessandra, how do you balance out building a team within a regulator to understand and keep up with what's happening and then try to develop policy around this sector?
Well, first of all, it's been very interesting, Melissa, what you were asking, and the answers. First of all, I think that regulators, not only the industry, we've been on a learning curve, starting with FinTech, understanding how to involve ourselves in that world. I think that we need to find a way to really bridge that gap between the traditional banking industry and everything which is new. I mean, if you think about the investments that banks have been making into know your customer, AML systems, I mean, we're at a frontier now where new investments need to be made, and a lot of the past needs to be abandoned for new implementations and therefore new rules. How do we cater for that? I mean, that is a very good question. If you look at, the way in which regulators, and in our case, we're also a central bank, are staffed, we are now opening up our supports, systems with a lot of people who come from different areas of universities and studies, compared to the traditional colleagues, and that we need that because, as I said, we want to, and that maybe can provide some comfort to those who have to carry companies towards the implementation of regulations. We want to have it's not light touch, it's use cases regulation. All right? I don't believe in light touch, to be honest with you. It never works. All right? I don't believe in heavy touch either. I believe in really understanding how you promote innovation in a stable way. In Europe, what we want is an industry that is there to stay. All right? We are very much aware of the fact, and we've seen it all in the fintech world, and we've seen it when in Palo Alto all the startups were starting, 90% of them didn't make it. So we want to make sure that those 10% that make it in Europe are there to grow and are there to provide to the European citizens services which are reliable, that are protecting their right to privacy, their data, and all of these issues, can be faced by a regulator if you really go and understand use cases. So it's not theoretical, it's not based on some theory, it's based on a relationship with technology and a relationship with companies that go beyond the traditional banking and intermediary industry, is meeting up with tech companies, meeting up with third-party providers. So that is really the effort that I think we're bringing forward.
One of the most interesting applications I've actually heard, because a lot of our investors are strategic, so banks and insurance companies, which is a great use case, is you are a property and casualty insurer, you write one policy for a multinational across the world, and yet you have all these subcontracts. Large language models are perfect to take all of that underlying data and say, okay, how many have flood risk? How many are using this type of cement or this type of rebar? To me, that's a great use of large language models, right? Versus, necessarily interfering. One use case I think is kind of difficult. It'll be interesting to see where regulators come out, which is actually real-time monitoring of call centers with consumers and then making recommendations for upsell or cross-sell of products. Those are very, very different use cases for the technology, where I think what you're indicating is it's going to be on a case-by-case basis what you see as far as regulation goes.
I think that's the effort that we need to make, okay? It's not easy, and so I don't think we're rushing to anything because I think it takes some time, all right? Also, I think that there is a response from the industry which is changing all the time. And so I think when we need to be there, to be really ready, if I can say that, to interact with that. One of the main areas where I think we're trying and be more active is the area of, those companies which they they fall outside the scope of traditional prudential supervision. That is a huge thing, of course. Because we are beyond some of the rules that have been there for a long period of time. So really, it's a blanket that cannot be pulled from too many sides. I think we need to step back, think, analyze, and move forward.
Yeah. So I want to turn to both the investors because every year there seems to be a new hype cycle of a new industry raising extraordinary amounts of money, despite the fact that many other industries right now it's pretty difficult to raise. So Sheil, 113 million for a business, gets a raise for a business plan. We're once again into billion-dollar valuations for very little revenue. What's your thoughts on the status of the venture market, or at least from the early stage perspective on it?
Yeah, it is pretty wild, especially coming out of the whiplash that we had from 2021 to 2022, to see again some absolutely crazy valuations. And we're seeing it in our portfolio too. We did an AI accounting company, and sort of immediately after we invested, a multi-stage firm came in with a much higher valuation, literally like weeks after we invested. And that's the sort of stuff we saw regularly in 2021. So I think there's probably...
So I want to just poke at that for 1 second,
Yeah.
right? Because I just sent out a letter about sustainable growth, right?
Yeah.
Cutting burn rates, right? And then you have this. How are you dealing with getting the entrepreneurs to realize that, okay, listen, this cycle just keeps repeating itself. It's going to, how do you get them to focus on the business part?
Totally, yeah. It's a great question. And I completely believe that, all these companies in our portfolio and outside in 2021 that raised money at these crazy valuations, ultimately, having a bunch of money solves for some problems that let you not discover how to actually build a business. And so the majority of those companies will fail from 2021. And I'm super worried about that happening again. And so in this case, we convinced the company not to take the money.
Congrats.
Thanks. Yeah, it's like they're two guys. They had $3.5 million in the bank. Do they need another 15? No. So I think that's really important. I do think there's some types of businesses that just need a lot of money, and that money goes to NVIDIA. But most of the generative applications that we're talking about are building on top and don't require that much money. And actually, in many cases, should require less money. But there's a lot flooding in. I do think the other thing is a lot of these companies are able to get to very significant revenue scale pretty quickly in some cases. But the question is how sustainable and how sticky is that revenue? And you've seen already in companies, some of these companies that raise $100 million plus rounds, they had a sharp drop off in revenue post OpenAI releasing more features. And last week OpenAI had a big demo day, and again a number of companies that were building something had to figure out what they're going to build, because what OpenAI has built with this new GPTs feature makes it really easy to build a lot of the stuff that companies had poured a ton of money into.
Yeah, interesting. And Ty, from your perspective, what do you see in the market on these companies? Very similar question to Sheil.
Yeah, no, I totally agree about the over-optimistic right now of investor and like what we discussed, that we saw startup that could raise the money, massive amounts of money, even though they don't have clear product market fit yet. And also, if you are founders that having worked at Google on AI or OpenAI, then you could raise massive round, not so difficult. So for what we feel is that it's kind of difficult, right, to actually control the valuation, because if you don't invest, your competitor will invest. So what we try to do is that first thing, we want to invest earlier. In the past, we might invest more like on Series B, so we go earlier to like Series A or seed stage, because by the time it reaches Series A, sometimes we saw like a $500 million valuation, and that's like hard to digest anymore. So that's the first thing. And then the second thing is that we try to choose the founder that have done it before. So serial entrepreneur, they have done it before, so the startup, and this is the second time we are doing it. Maybe they have done startup related to AI, but this time they are doing generative AI in similar way. So we saw like some startup founder that built chatbot before and sold it to McDonald's, so that McDonald's could use it for drive-through. But second time around, he's now building the startup again on voice chatbot for customer service, but he does it with generative AI, so that the experience of chatting with customer will be more human-like, and so something like that, yeah, we looking for in order to try to reduce the risk of having to pay high price and then having a failure. So we try to invest in the startup founder that have experience before, done it before, know how hard it is to build a startup, but successful and done it the second time or third time.
So I want to ask everyone a sort of similar question, which is, what are you most excited about and what are you most worried about? I'll start with you, Shraddha.
Okay, I'd like to respond to that and also to something that Alessandra said. And I think it's amazing that when you hear a regulator talk about how regulations are going to be use case, I think I want to just compliment you at least on that thinking, because it's true, we use terms like light touch, heavy-handed very loosely. But the fact that today regulators like yourself are thinking through the fact that we need a regulation to be use case is in itself, I think, a win, that we've arrived at a point where there is that, I would say, nuanced thinking in policy making. And I think it'll be very, very important. So to your point on what we're most excited about, I think the next few years are going to be the most exciting years in policy making. And I think the opportunity that exists for the industry and regulators and policymakers to have that meaningful dialogue, the stakeholder consultation, the I would say collaborative approach of writing what would possibly define technology policy for many, many decades to come, I think is an opportunity that we need to seize and we need to work towards. I'd like to once again cite, how in India, and to your point, regulators and the role being played by regulators, you had touched upon it earlier as well. India today has the most advanced digital payments system in the world, perhaps. And it is something that the world is looking at emulating and taking forward. And that has come on the back of a very, very strong regulatory architecture. And I think at some point when we talk to our fintech founders, we have now about 80 plus investments in fintech overall. But when you talk to fintech founders, they feel the short-term pain. They feel that there is I would say, a regulatory overreach, or there is too much going on the regulatory front, whether you look at our regulators like the Central Bank, the Reserve Bank of India, or you look at, but I think the one thing that especially, our managing director, Shailendra Singh, often talks about is how our regulators are world-class, and how what feels like short-term pain is long-term gain, and they do not allow bubbles to form. They do not allow you to be cute about regulations and say, we see that loophole there, let's build around that, and then we will see, because regulations will play catch up. And I think it's very important to understand that it is not in the regulator's interest to stifle innovation. it is in their interest to promote innovation. At the same time, consumer protection, managing the risks is something that regulators need to do. So if we as investors, if startup founders understand that objective early on and build startups around that, I think you've solved the problem and anticipate what regulations in any space could look like. And I think this one is an opportunity. What concerns me, just to wrap that up, is, again, I would say, the point that I had made earlier, that are we going to be too hasty? Are we going to rush into things and put in place something that may not age well, given how quickly technology is changing? So I think that is always a fear around, is there too much conversation? Is there too much going on? Are there too many legislations being passed around AI before pausing and seeing what that impact would be? I think that's the fear right now.
Well, I think I'm not a regulator, but I will say it's pretty hard to put that burden on the regulators when this technology is moving so quickly that even most of us can't keep up with it.
Exactly.
So I think that's
and the onus is on us, because I think the onus is completely on us as an industry. And I'm not putting the burden there at all. In fact, I'm saying we need to take the burden on us, because if we're not going to educate, if we're not going to have these conversations, if we're not going to be leading those stakeholder consultations, going and having those conversations and being collaborative, then we're the ones who are going to suffer. So I don't think the burden's on regulators. In fact, they're doing a marvelous job in trying to keep up. When you have the deputy governor of the Bank of Italy saying we're looking at use case regulations, that means they're already thinking along lines of how this will benefit the industry.
Yeah, but it's just a very difficult thing, because it does go well beyond financial services. And the power of it is probably beyond what we've ever seen before. So I think it's quite difficult from that perspective. I mean, Sheil, from what are you most excited about, and what are you most worried about? And it can be excited can be an industry, and worried can be the destruction of that industry.
Yeah, I mean, excitement-wise, this whole thing has been super fun. I live in San Francisco, and I feel like I've had a little bit of a front seat at seeing this over the past few years, and it's just been so fun. For me, I use ChatGPT more than I use Google to search for things now. Every day, I'm seeing more interesting use cases and using it for something that I didn't think about before. And just like the pace at which these foundational model companies are moving is very quick, and they're pretty efficient. Like OpenAI has 1,000 employees. It's still pretty small. Almost all of them in a small office in San Francisco. I think the future in fintech will be, first of all, it's hard to say, but the stuff that I'm excited about right now is companies that are enabling incumbents to operate more efficiently. I think folks that are going after the incumbents with something new AI, I find that like there's another startup that already has customers, and these AI implementations are not that complex for the most part. So I don't think that's what's exciting from an investment perspective. From an investment perspective, I've done more in enabling incumbents either to operate better, more efficiently, faster, or work within the confines of regulatory use cases in AI. What I'm worried about is over-regulation. I think this is AI is a global thing, right? And there is some worry that regulations that we do in the US puts us at a competitive disadvantage globally against China, most notably. And
well, I think they should learn a lesson from FTX. When you don't have any regulation, people get into trouble.
Well, FTX was not regulated in the US.
So the US hasn't really been great on regulation.
Well, FTX was not in the US.
So I can say that.
FTX was in the Bahamas for a reason, right?
Yeah, well, okay.
I don't disagree with your point. The last thing I'll say, by the way, is we talked about blockchain and all this other stuff. I think part of the reason that AI is so much more exciting to us than blockchain has been over the last many years is every one of our portfolio companies is implementing some sort of AI today. Yeah. And despite working in fintech, which you would think would be the best use case for a lot of distributed ledger technologies, we have very limited use cases in our portfolio. So I think we've just seen quick adoption.
Well, I think you said, like, every company is using it or thinking about it, which is very, very different than what we saw from DLT.
Exactly.
Yeah, exactly. Ty, what are you most, and then we'll finish up with Alessandra.
Most concerned? I think
Concerned
I'm-
and excited, I mean. How can you not be?
Let me talk about concern first. I am concerned that there will be one single digital AI regulator entity that come out globally. Because I think that different countries have different criteria when they think about how to regulate AI. I really don't think that it will be effective to have like one single global entity to be the one who regulate AI in general. Different culture, they care about different things, and what is acceptable in one country might not be so acceptable in another country. Also, the sovereignty concern different, the national interest is different. Also, having one single entity, I think that it will be difficult to catch up with how fast AI, especially generative AI, is going. We are very excited to see that due to this open source movement, the progress of generative AI is super fast. Like every week, something is being released, and we have to read all these papers that are being published on archive. And so if you have only one single global entity that control this, I think they will not be able to catch up on all this development.
Okay.
Yeah. So that's my concern, that we should not have one single entity to regulate this.
Alexandra?
Well, of course, we are a central bank regulator, so our polar star is protection of consumers, people, and protection of the stability of our, financial markets and our countries. So, very excited about this technological, these technological developments. We see, the applications are amazing and go beyond what we have been seeing today, especially with AI. On the other side, concern about discrimination, concerns about the underlying technologies and the lack of transparency in some of the algorithm constructions, concerned about the creation of citizens of level 1 and level B, so polarization of the ability of consumers to access to technology. So it's a very difficult balancing act. You were right, Melissa, and that's exactly where we are at. So I think that we need to be, timely, but at the same time, we need to be wise. We need to have new skills and new abilities to read through the industry. We need to be forward-looking, and we do need to protect. So how do you combine that? That's a very good question. We're trying our best.
Great. Well, everyone should join me in thanking the panelists, and thank you very much for a great session.